welcome.
Thanks so much for having me.
It's great to see you.
Excited to chat.
Yeah. Let's start with Laura. You start with economics at Oxford. You go to Goldman. Then you decide to leave and go into research, into neuroscience. Tell us more about Atomico, the investment thesis, as we start to get into more of a conversation around founders and kind of go down that road. So let's start with Atomico and give us the idea there.
Yeah, so Atomico was founded 20 years ago now by Niklas Enstrom, who was the founder of Skype. One of the earliest funds building out of Europe, and really born of this desire to create an ecosystem that Niklas hadn't had when Skype was founded originally, and this belief that great founders can come from anywhere. And of course we've seen that trajectory now, but certainly when it was founded it was kind of a counter some way
so visionary at the time, and now it's so apparent.
Absolutely, and so I think Niklas's vision there really informed the foundational elements of Atomico, and it not only in terms of this focus on Europe and supporting European-based founders, but also in this real belief that Europe had every asset to become a kind of global powerhouse from a tech perspective. And so, so much of the journey that we've been on over the last 20 years has really been about not only raising ever kind of growing funds across kind of the life cycle. So we've got a venture and growth strategy, so we've got the flexibility to work with founders, but also to be an ecosystem driver. So a lot of our time is also spent in driving events and data gathering with the State of European Tech, which is a kind of foundational element also of for the European ecosystem. One way of disproving the notion that Europe couldn't grow at pace was obviously to track the materiality of its growth over time.
Talk about that. You've mentioned that the report's in its 12th year, I think. Talk a little bit more about what you decided to track, why, and those key indicators and how you've seen them evolve, the ones that have surprised you the most over the years.
The idea was really to track both the lagging and leading indicators. So what we mean by that is the obvious leading indicator is where capital is being deployed and company formation, and then lagging indicators is kind of subsequent rounds. And
how they do.
Exactly, how they do.
To be deployed in the right place.
Yeah, exactly, right. And so, there have been a lot of kind of the obvious direct indicators, both leading and lagging, that we've tracked over time, and then increasingly getting more so into the different vectors for growth underpinning those. So, for instance, the rate of technical degrees, the types of technical degrees being studied, where capital and where people are moving. So, where human capital is moving, and so we've done an ever kind of more comprehensive job. And I say, the Royal we've got a dedicated team of insights and data engineers who really track this on a continuous basis, as well as kind of sentiment analysis and finally, policymakers and some of the kind of key policy developments that also inform the advice and support that we give not only founders but government.
As you think about the last even, let's say, 5 years, 3 years, talk about some of the trends you're seeing in the skills development or the investment in those areas that the data is showing you, that's giving you some hope and signal on what you're focused on now.
Yeah. Well, in the context of the last couple of months in particular, and often the public markets from a technological perspective lag what we see in the private markets, of course, we've clearly seen a sell-off in kind of your traditional high growth, high margin, kind of long duration type stocks, SaaS stocks. And there's been a lot of chat about that. And I think largely,
that's particularly this week.
Yeah,
right? I think
particularly
we're talking
this
about
week.
It at a time and it's very topical.
Absolutely. But I think conversely, what's been, also top of mind for me at least is looking at the repricing of heavier assets, low obsolescence type kind of core infrastructure. So be it utility, to exactly the point you're mentioning around the Industrial Revolution. What are the underpinning assets that really drive technological disruption and this particular wave of AI? And actually, one of the things that's been staggering to see, if you look at the European public stocks in particular, is that you can see that the capex to sales ratio is at a 10-year high. That there is an increment. And what does that mean? That means that public investors in the broader market seem to be rewarding those assets as being the greatest source of alpha potentially, i.e. those people who are really deploying capex at scale. And we can see it obviously with the hyperscalers, and we know that that we've gone to a whole different level of capital intensity, which better than I do. But that's true across heavy assets and what I describe as low obsolescence. The harder assets to disrupt, the really stand the test of time over multiple cycles. So, that you can really see that very clearly in the public markets in Europe in particular, which intuitively makes sense, of course. There's been an enormous amount of focus on reindustrialization in Europe, and particularly in the context of increasingly fragmented global supply chains and the balkanization of the global economy, for better or for worse. That's been obviously a key driver of dispersion in returns, both in European markets and.
How about the skills, as you
assets.
see? I mean, interesting to see the capital and the way you describe the investment shifts. But talk a little bit more about the skills you're seeing.
One of the most interesting trends we've seen is the rate at which first-time founders, or put differently, undergraduates from STEM degrees are choosing to go into startups now versus what they were doing 5 years ago. And there's been a dramatic shift in the percentage of people choosing to do that as the first job, rather than going into, as I did, professional services. And, of course, we've heard about it.
Entrepreneurialism wasn't a degree, when I was graduating, it wasn't. I mean, I talked to people today, like my child's studying entrepreneurialism, they're taking that course at this college, and I thought that wasn't an option.
No, absolutely.
That was risk. That was crazy when I was coming out.
And that that may have been the US. I mean, Europe, and there's been a lot that we've spoken about here, and Nicholas has really been at the forefront of the conversation around is the appetite for risk, and that's really changed. And I think not only has it changed in terms of the just entrepreneurship writ large, the number of people choosing to go into more entrepreneurial journeys, but it's also evolved in terms of the types of companies that are being built, and particularly over the last 3 years, we rank from a company formation perspective, those sectors that are getting the most kind of influx for kind of first-time founders, or indeed repeat entrepreneurs, just founders full stop. And you can really see that it's climate tech, industrial innovation, people focusing on exactly the kinds of knotty problems that you see the kind of repricing around in the public markets that really weren't the darlings and the kind of focal point for VCs, certainly historically. But it speaks to a cohort of young founders and founders who want to address some of the really, the major challenges we face. So I think there's an awareness there that is kind of really pan-European around the kinds of companies and problems we need to address now.
As someone who leads the AI fund for Atomico, give us a little sense of what you're seeing, and maybe if you want to juxtapose it against other markets like Asia or Americas, but what are you seeing particularly unique to Europe, or maybe even just that parallels other markets? What are you seeing in Europe as you kind of go out and look for companies now? Yeah,
so much of the thesis there is we're at a point in time where we just have to find ways of doing more with less, and at an accelerated pace across industry and critical industries specifically, and that's true of semis, materials, auto and aerospace and defence. And so we really spend a lot of time looking at, where across the manufacturing supply chain, from top of funnel simulation right through to the being in production and ongoing monitoring from a manufacturing perspective, are what are the solutions we need, and where are the biggest sources of gains to be had, and not over just the near-term horizon, but multiple time horizons. And where we really landed when we spoke to the physics X team, were there's this incredible opportunity now to marry generative AI with classical ML and build large geometry models and physics models, multi-physics models, which really weren't necessarily an option.
Yeah, it wasn't there. Well.
Right.
And so it sounds to me like you're taking the data you're seeing, you're seeing the gaps or the opportunities for growth, or for, I wouldn't even say, some of it is problems to be solved.
Yes.
But at the same time, it's where you see market opportunity to kind of solve a problem. And then are you driving investment that way, or you're just going out and looking for who's doing it?
Largely the latter, and I think this is where it kind of answers the why now moment, because founders are building into this, and it just so happens that there's incredible alignment from a founder perspective, from a market perspective, which is very unique. And really from a policymaker perspective as well. I think there's certainly, when I started in VC, there wasn't this focus on technology as the necessary coefficient for growth. There's a reason probably that the Nobel Prize last year went to people who are focused on this, like Philippe Aghion. And it's because there's a general recognition now across Europe, globally, that really this is the coefficient for growth. So the amount of focus on deregulation, on grant funding, on infrastructure, and kind of specifically HPC capacity and compute is just, it's never been like this, which is extraordinary. So it feels like a very special moment.
I think the unlock of the capability of those HPC systems, and now when people have a glimpse of the future and what it can do, I think the more compute we can throw at problems.
Yeah.
Talk me through a little bit what you're looking for and how you coach them in terms of what stage are they ready for different types of partnerships, and why someone like Microsoft becomes attractive to founders, and where you kind of put them along that journey.
Yeah, I think that there are in terms of the stage and the kind of specifics of scaling in Europe, I think, ideally where we've seen these kind of partnerships really start to become part of the discussion from a board perspective and a kind of founder priority is when you've got obviously product market fit, you've got a repeatable enterprise motion, but you're starting to hit some procurement bottlenecks. Those may be driven by just the sales cycles, the nature of the vertical you're serving at enterprise, or also kind of required security protocols and compliance. And really it's at that point where you start to see the urgency, but also the advantage to collaboration in terms of a trust transfer.
Sure.
The signaling, of course, and kind of at the lowest level, kind of, or the simplest level, kind of I'm getting access to a variety of Azure credits and kind of very informal partnerships perhaps, but at the highest level, something much more strategic, which you would love to talk about, maybe even in the context of some of the companies I mentioned. Yeah. But IP co-development, strategic account planning. There's a real range, but you have to have that inflection point in terms of sophistication.
So
of the understanding.
That's an interesting one. Thinking about that inflection point. Does it now, with the way generative AI is going and with the way applications are built in the new architecture, I'll call them, with inferencing and LLMs, and it's more than just traditional infrastructure and compute. Yes. Let's back that up, and actually it's more important to kind of maybe choose your hyperscaler partner earlier on in the cycle.
Certainly there's a growing awareness that there is both commercial de-risking capital de-risking involved above and below the line with with early hyperscaler partnerships. And so then the discussion really evolves around who is the right partner, right. And how can you balance the multiple hyperscalers potentially in multiple partnerships, and what is the menu of things you should even be thinking about when you go into these conversations. And it's interesting because this point around what are the menu of things you need to think about from a strategic capital perspective really extends to any type of investor now. So what I mean by that is it's also relevant when we think about the sovereign wealth funds, or we think about even private institutional capital and traditional VCs. I think this focus on both strategic de-risking, commercial de-risking, as well as the capital itself is really coming at the forefront of how we rank order interest to building a syndicate from a capital perspective.
I mean, it is. I agree. As you think about de-risking the investment, as getting that partnership off the ground faster, is because now what I'm seeing is a lot of the product market fit being found faster.
Yes.
Right, and now as the dev cycle collapses or condenses so immensely fast, we're more and more saying, I think I want to start building on you first, because then it's an easier transition.
Yeah. I can imagine. And I think in the context of Europe specifically, I think it's a combination of, as you say, the dev cycle collapsing and the PMF happening so much earlier. It's also that by nature of the types of industries and problems that people are going after. I think earning that trust very quickly, and this trust transfer and the signaling that comes with working with Microsoft is incredibly advantageous at the right time.
What are your learnings in terms of working with us that you coach founders on?
To hit on one thing you just mentioned there, the specificity of the ask in the partnership is extremely important. And when I've seen it not work very well, it's because it's vague. And so what does that mean? What is specificity? Specificity is showing up with a very clear understanding of your ICP, ideally even a target account list. And I'm talking about kind of go-to-market and kind of co-marketing and co-selling motion rather than some of the other things we mentioned. But let's just start there as an example. When things haven't worked is when that's not been the case, and it's too nebulous and it's vague, and it's you go into a meeting and you kind of say, well, directionally we think we could do this range of things, and we're thinking about these first, and I've seen that not work, and then you get caught up in let's say maybe you're theoretically in a co-selling discussion, but it's just you never get to something tangible and concrete.
A founder I was talking to said, we have a very blurry vision of the future, but by design.
Yes.
Because we know we're going to the future.
Yes.
It's not worth putting the energy into making it so clear at the point because it's changing so quickly.
It's incredibly academic.
Yeah, I thought it was good. Good.
I like that.
You talked a little bit about, the inflection point, and you talked about when it is important to have that unlock for companies. As you work with founders, give us a sense of some of the most common mistakes you see, whether it be personal traits and ways they engage things, or whether it be just strategic decision, wrong assumptions. I mean, you've worked with so many now, and you've seen so many examples. If I were to say, name your top 3 mistakes you see founders make, I don't want to put you on the spot that way, but there's got to be some things that pop out where you say, oh my gosh, I see this all the time.
underestimating how quickly they can move. I think that's one thing that we're seeing.
The founder?
The founders in the company can move. I think that tends to be, particularly in this market when speed has such primacy. The other thing that is very specific to this market, and I don't know that it's not necessarily something that founders are doing wrong. It's actually something that it's more of a question right now. What we're seeing a lot of across tech is capital, balance sheet and distribution becoming the gravitational center and advantage also.
I think I hear you saying you're watching a founder with a product that is probably pretty good, get in the door, iterate rapidly, and then deploy capital towards resources, more importantly, of acquiring the best talent to just continue to increase their pace and speed and versus waiting to find what they think of as product market fit.
Exactly. And I think the third thing that again is quite specific to this market is undervaluing the role of FDEs and the criticality of the services component.
I do agree. The ones I'm seeing accelerate very quickly have thought of that component of I better help someone do this.
Definitely.
Interesting.
Definitely.
I know we have to wrap up, but I wanted to just, something I love to ask people is there's always some quote that people either inspire them or they find themselves repeating to founders or things like that. Do you have anything, and especially through your incredible education and studies?
Apologies to those who've heard me talk about this before, but I really like Bill Walsh. Takes care of itself. The central tenet of you can't control the outcome, but you must do your best to control your inputs and really be world class at those inputs. I think that mindset of continuous improvement, really, I love.
Laura, you exemplify that. I think you definitely are someone who I can tell controls your inputs to get some pretty extraordinary outputs. And I think what's most impressive to me is just how your worldview and how you think about the macro, and now you're bringing it into practice with the companies you're investing in. And so I really appreciate you spending some time with us today, and thanks for the insights on partnership, and I think what we can do better. You've always taught me a ton in terms of how we should be thinking about engaging founders, and I think you gave me a lot more today. So I really appreciate the
Thanks
time.
So much for having me. It's been great. Thank you.
Likewise.